Good afternoon. Thanks for joining us today. We have Discovery Metals presenting, which is our first company in Silver Week this week. It's really exciting to have Taj Singh, CEO, and Forbes Gemmell, VP Corp Dev, with us here today. I should know their names by now. They've presented a number of times with us, but apparently it's off to a bad start. But I'll get the guys to come on screen now. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can check them out on the company's presentation on their website. And there will be a Q&A section at the end, so feel free to put your questions in the Q&A box at the bottom of your screen. The presentation will be relatively short. The guys have presented a number of times. I think most people know the story fairly well. If you're new to Discovery Metals, I would encourage you to check out some of the older webinars on the Adelaide Capital YouTube channel. And with that out of the way and the worst introduction I've ever given, I'll hand it over to Taj and Forbes, who will run us through the story.
Perfect. Thanks, Deborah, and thank you to Adelaide Capital for having us here. I'm Taj Singh, President and CEO of Discovery, and along with me is Forbes Gemmell, our VP Corporate Development and Investor Relations. So again, as Deborah pointed out, we'll keep the presentation pretty brief, an overview of the company, then get into what's currently happening, recent stuff, and then open up for Q&A. So Discovery Metals, we're focused, as you most likely are aware, on Mexico and focused on silver, specifically Cordero, one of the world's largest undeveloped silver deposits. That's our flagship. So moving on, there will be forward-looking statements in the course of this presentation, and kind of the teaser right to the end. What are the points that really make Discovery a compelling story? And it kind of boils down to three characteristics and the combination of them, actually. And so we really believe Cordero is developing the attributes quickly of a tier one asset. And the reasons why are these three reasons. Characteristics: margin, number one; size; and number three, scalability. So for margin, we've continuously showed every 3-4 weeks with drill results, excellent grades over broad widths in the high-grade bulk tonnage part of the deposit as well. More recently, we've been showing quite a bit of promise here with the high-grade vein potential on veins that flank the high-grade open pit, and we'll talk to those. Size is a pretty straightforward one. Cordero itself is the second largest undeveloped silver resource globally. And it ties in with the third point, but the third point is really unique on its own, is scalability. It's the torque, and it's a simple fact that silver deposits, most of them are, a vast majority of them are underground deposits. You're either in ore or you're in waste. We are one of the few primary silver open pit mine projects in the world. So you get the resource expansion, but you also get you get the margin expansion when silver prices go up, but you get a significant resource expansion as well, which you won't see in an underground mine. And I think our deposit is very amenable to being able to scale up to that larger size. You'll see, and we'll talk to that. Moving on, the basics of Discovery Metals. We are located in Chihuahua State on a major and robust gold-silver belt. There's lots of long-lived operations around us. Here's a selection of the few. We are at the resource and PEA stage. There is obviously, as you know, we have a previous resource, and in that 2018 resource, there is a global resource of 1 billion ounces of silver equivalent. At spot prices, silver makes up about 70% of the NSR value. So those are, we're coming up with a brand new resource, lots of drilling since the last resource. Over 100,000 meters of drilling will be added to that, completely brand new interpretation. We'll talk to that. And then subsequent to that, going into a PEA. Cash position is also a major differentiating factor for us, especially being a developer. We have over $80 million in the bank, and actually there's some warrants that are coming in, and they'll actually expire tomorrow. We have over $90 million of cash in the bank. That really puts us in a strong position to aggressively advance Cordero to a construction decision and actually leave us with a significant portion of the equity capital needed for the build as well. Moving on to the next slide. You like to see teams that have done it before. and we are part of the Oxygen Group. The Oxygen Group is an integrated merchant bank and mining house and has had serial success over the past decade, building 9 mining companies, 5 of which have been acquired, and really just making significant returns for the shareholders. So ability to attract capital, ability to have long-standing supportive shareholders has been fantastic. In addition to that, Eric Sprott owns 27% of Discovery, actually a little bit over that, and it's one of his largest investments in the silver space, along with Mag Silver and Silvercrest. We're right there, so good company to be in, and as well on the producer side, First Majestic. So again, yeah, good company to be in. Moving on to the capital structure, quick overview. You'll see kind of the ownership breakdown. Institutions are about 28%. As I mentioned, Mr. Sprott's at 27%, retail 34%, and founders, management, and board at 11%, which is quite high for a company of this size. So we definitely have skin in the game. You'll see share price here has been pretty good and steady, but I will say, you know, sitting here at these kind of share prices, we were actually substantially higher a few months ago, even at silver prices in and around here. So I actually think it's a very compelling time to look at the Discovery story. Additionally, what's something very interesting, and I like to point out, is the volume. We've been trading over 1.5 million, 2 million shares very regularly per day, so the liquidity is fantastic. Market cap sitting in and around 600 million Canadian, and again, cash balance as of December 31st was 80 million. We're now well through 90 million. Moving on. In terms of ticking the boxes for eventually becoming a mine, it's an important point to note. Cordero, we really believe, has a fantastic platform to execute. Very simply, it's 100% owned. No messy option agreements, JVs, earnings. We own 100% of it. Land package sits at 35,000 hectares. The resource area in that red polygon, right kind of in the middle of the property, represents less than 1,000 hectares of the land package. So exploration potential obviously is something that is a big part of having that large land package, and I'll talk to that in a second. But also layout, logistics, etc., for eventual open pit mine is fantastic. Local infrastructure, major highway up one side of the property, power line up the other side. Two more boxes ticked. Topography, classic northern Mexico rolling topo, scrub brush, remote but still close enough to highways, etc. As I said, so fantastic kind of topography for an eventual mine. And we are located in Chihuahua State, which has consistently been ranked as one of the top mining states in Mexico. We have very good relations locally as well as at the state level, and they're very pro mining. And then tying into the other point I talked about was the land package, is the multiple property-wide targets. You'll see here in the orange, these are preliminary reconnaissance targets. And since this graphic was produced, we actually have several more targets that have come up. But here, the orange areas are interpreted intrusive centers. The property has not seen much work at all. Almost all of the work has been focused on the resource area, both by the previous operators and us. We are now going to start building up with several mapping and sampling teams, building up targets. First time airborne mag and EM was flown was last year. We're going to use geochem with that and start really building up some targets and hopefully be able to drill them end of 2021 and into 2022. And we really believe Cordero will eventually become a district. You've got 1 billion tons of mineralization in that red area, and you'd think there'd be some other deposits nearby, hopefully, because it's in a very geologically fertile area. Moving forward, looking at 2021 and what that looks like, phase 1 drilling will continue, as well as metallurgical testing, and those will go into just towards the end of Q2. Phase 1 and phase 2 drilling, it's important to note, is seamless. We're going to finish our phase 1 drilling and met testing. That will then lead into a new resource into Q3. And then subsequent to that, the revamped PEA. Phase 2 drilling will start seamlessly right after phase 1. So what that means is consistent news flow. Every 3-4 weeks, drill results throughout the year. And the total drilling program is 70,000 meters. About 20,000 meters or so of that is associated with phase 1 drilling, and 50,000 meters, the remaining 50,000 meters associated with phase 2 drilling, which is really a focus on the PFS, the next study, as well as looking at the high-grade veins, which we'll talk to in a second. Additionally, I talked about property-wide targets. We'll begin, hopefully, drilling on a few new, prospective targets in the Q4 of this year. So moving on, we'll pass it off to Forbes Gemmell, who's our VP Corporate Development, who is the owner's rep for our technical studies, and I'll chime in as required. Forbes?
Yeah, thanks, Taj. So just a step back in time. So we acquired the project in 2019. There's this legacy perception of Cordero that it's just this giant low-grade system. And we've been really successful, we feel, of sort of turning that concept on its head and showing, okay, not only is it sort of a big low-grade system, but there's beautiful high-grade zones a part of that mineralized footprint too. And so our drilling has really been focused so far on really defining and delineating these high-grade zones, showing they're coherent and they hang together. And so that drill data, we're then going to take with all the historic drilling and culminate in a new resource model third quarter of this year. There's going to be a huge amount of data supporting that, almost 200,000 meters of drilling, and in the end, probably close to 400 drill holes. So it's going to be a very sort of robust, defensible resource model. And the first half of the year, as Taj said, is metallurgical test work that's ongoing. The previous test work confirmed that metallurgy is simple and clean. We feel by focusing on higher grades, we should be able to get higher recoveries. And so that's really what our test work's focused on. That test work with the new resource model is going to result in a completely new look PEA in the fourth quarter of this year, really focusing on high grades early in the mine life and stage expansions with very manageable CapEx numbers. And I'll elaborate a bit more on that. So again, just to step back a bit, I mean, this is what the project looked like before we bought it. And what we're depicting here on the right is a plan map. So we're looking down from above and we're showing the pit outline here in gray from the old PEA. So for context, that pit outline is more than 800 million tons of rock in that pit. About half of that is ore and half of that is waste. So in terms of scale, that's a giant footprint. You've almost got sort of 3 kilometers of strike, and the lateral extent is almost 2.5 kilometers. And what we're depicting within that pit shell is all the historic drilling, so none of our drill assays, but all the historic drilling with assays in orange from 50 to 100 gram per ton, and in magenta assays above 100 gram per ton. And in our mind, that's sort of the grades you want to see to make sure you've got a good margin project at say a $20 per ounce silver price. And so what we saw is we've got a very sort of nice sort of high grade bulk tonnage domain based on the historic data in the southwest there. But if you look beyond that, there was a lot of these drill holes outside of that area which returned very good grades over broad widths. And that was really what attracted us to this opportunity. Is you've got this great starting point here, but fantastic opportunity to come in and drive value through the drill bit by starting to come in and plug some of those gaps. And so I'm just going to show you this exact same image now, but with our drill assays overlaid on top of that. So you can sort of see this is the before, and then this is after. So you can really see how successful, I mean, some of these big gaps, these are our drill holes coming in that high-grade domain rather than just this sort of small part in the southwest now. We feel like we have to find this sort of orange zone that's got about 1.5 kilometers of strike extent and almost 500 meters of lateral extent. So certainly a big high-grade footprint. We're still growing that zone. We put out a press release just last week about 6 holes in the south corridor here, and you can see sort of the intercepts we're getting. So we now feel we've expanded this high-grade bulk tonnage domain to the northeast there, and still room to grow further as we head northeast as well. So we've still got another 30,000 meters of assays to come in, so still a lot of news flow to really tie this story together. But what we're depicting in orange here is really what's going to form the basis for the PEA. And what we're going to focus on is these stage expansions, and we've got this beautiful sort of high-grade zone right near surface in the southwest there. And I'll talk to that on the next slide, but just as a frame of reference, that's what I'm talking to there. So again, for perspective, we've showed the approach from the old PEA. So this is done by a previous company, and it took the mindset bigger is better. And they had a low cutoff grade, 20 gram per ton. That meant the head grade going to the mill was below 50 gram per ton, so certainly a very low head grade. To make that work, you've got to have a big mill to get economies of scale. But at the big mill, you got a big cost. So the capex on that was almost $600 million. So our approach is really focusing on high grades early in the mine life, and we're targeting something hopefully well north of 100 gram per ton. So that head grade from the previous study, we've more than doubled that, and in some years maybe even triple it. And then as far as sort of the capex numbers, we're looking at starting off at 10,000 tonne per day in that sort of southwest zone I showed, and expanding from there. And just for context, we're running some internal numbers now, but hopefully we can get a capex number of less than 250 million to build that 10,000 tonne per day mill, so a very manageable number. And we should be producing at that throughput rate more than 10 million ounces of silver equivalent. So that would make us the top 10 primary silver mine globally. Year 5 or year 6, we then expand the mill to say 20,000 tonne a day. Now we're talking production north of 20 million ounces silver equivalent per annum. And now we're a top 5 primary silver mine globally. So very manageable capex numbers, but getting us to a scale where we'll be one of the top primary silver mines in the world. I'm just going to touch on a side part of our story, which are these high-grade veins, and they're not going to be part of our PEA. We'll look to potentially include them in a pre-feasibility study in 2022. But we're showing the sort of same orange zone. That's the bulk tonnage domain, and on the flanks of that, we've got more than 5 kilometers of strike extent of these vein trends. And we know these vein trends are real. There's been artisanal miners mining these for decades, but usually only going down about 40, 50 meters. And so we're coming in now and just putting in some initial test holes into these veins with spectacular results. I mean, if you look at Todos Santos, our first 2 holes were 342, 344, and we hit 1.5 meters in both of those, around 2 kilograms per ton. And since then, we've been doing big step outs, 100, 150 meters. This last step out, almost 250 meters, and again, 3.3 meters of almost 600 gram per ton silver equivalent. So it's very promising early days. And what may play out is you've got the sort of big open pit down in the southwest here. That's always going to be the engine room to the deposit. But you may have these beautiful supplementary high-grade veins, which you can mine from underground and then feed the mill at, say, 500 to 1,000 tonne a day. But the grades on those veins could be north of 500 gram per tonne silver equivalent. So it could provide some beautiful icing on the cake to what already is an attractive project. So we're just going to finish off here with 2 slides to really highlight where we feel we differentiate ourselves from a lot of other silver deposits out there. And it's this concept of scalability. And it's often a nuance that's missed. And what we're depicting here in the chart on the right is the resource. It's the old resource at different cutoff grades. And so this is the highest cutoff, 50 gram per ton. So you can assume this stuff is probably good margin material at a $20 per ounce silver price. And you can see at that cutoff, you've got almost 700 million ounces silver equivalent. Now, if silver prices go from $20 to $25 per ounce, which they already have, you've got almost 500 million ounces of medium grade material sitting there on the sidelines at a lower cutoff, which is now economic at that higher silver price. And then if silver prices keep pushing north to say north of $30 per ounce, again, you've got another 400 million ounces of silver sitting there on the sidelines at lower cutoff grades. And so it's that scalability that at a higher silver price, the deposit actually, the resource actually grows. Whereas you look at most silver deposits, which are veins, and you're either in ore or waste, there's not really much sensitivity to cutoff grade. So these columns don't change as you move the cut-off grade down. Sure, you get the margin expansion, which we will as well, but we also get that natural resource growth with it too. And when you look at this table here, which we're showing the top 10 undeveloped silver deposits by silver resources, you can see 7 of the top 10, silver is actually a byproduct. So if you're an investor trying to get exposure to that silver talk, that's obviously not possible with those projects. Then the 3 primary silver deposits, the biggest is actually is owned by the government of Tajikistan, so impossible for an investor to get direct exposure to that. And La Petaria, that's actually makes up a small component of SSR mining. Whereas Cordero, this is what really is the value of our company. So for an investor investing in Discovery Metals, you're getting direct exposure to that size, that scalability, that talk to the silver price. So we feel that really differentiates ourselves from a lot of our peers. And I feel when you look at the size and our peers at that scale, there's not many opportunities for investors out there. So that's a presentation, Deb. I'll hand it over to you now for questions.
One that came in earlier, which I think is really relevant, is just about the local authorities. So how would you describe Discovery's working relationship with the Mexican federal and state authorities?
I think you're on mute. I'll let you run with that.
Perfect. Yeah, I'll take that. We basically have worked. We've really made a concerted effort to engage on the political level, locally, statewide, and federally, and we have very good relations across the board. You'll see in a lot of other jurisdictions they've been having some issues. I think even in terms of headlines, sometimes Mexico gets a bad rap. I'll tell you, we wanted to expand our drill permits, for example. Process that's usually very clear and transparent takes about 3 months or so, which is great. We got it in 6 weeks, and basically allows us to drill this entire resource area all the way to a construction decision. So we've really worked on doing it. And I've always said, listen, Mexico's honestly one of the best mining jurisdictions to be in. On top of that, we're in a fantastic state in Chihuahua. And so really no complaints on that end. For moving things along. They get it, it's in their DNA, and mining's part of the culture there.
Okay, I don't see any other questions on Mexico. If anyone has any, feel free to input them. So here's a question that I often get about Discovery. Do you aim to sell the resource or develop it? If a sale, what sort of timeline should we expect? How do you look at developing this asset? I guess is the question. Do you want to do it yourselves or do you want to sell it?
Yeah, look, that's obviously a question that comes up a lot, and I think we're taking an agnostic view to that. I think we're going down the path as though we would be building this ourselves, and then as we go down that path and de-risk the project and get closer to a construction decision, we're going to have to evaluate the risk-return trade-off if there's a compelling offer that comes to the table. So we feel right now we've really got our heads down. We've got a busy year ahead. We've got to get the resource update out, the PEA out, and that's a critical de-risking milestone for us. And then I think at that point in time, we'll have much more clarity around trying to evaluate that risk-return trade-off. But we are taking that agnostic approach, but really making sure that we're cognizant of risk, but also return of shareholders as well.
Can you remind us on the timelines for the updated resource?
Yeah, the resource on the slide I talked to is coming out in Q3, and then about a quarter after that, on the back of that is the PEA. And again, a point I want to make here is this PEA is not a typical PEA, arm waving PEA. It's really what we're calling internally a PEA plus, but even actually more akin to a PFS. The met testing will be probably PFS quality. A vast majority of the resource will be in indicated and above, and even more so, the mine plan will be in a lot of higher confidence categories in terms of percentage, what you typically see in a PEA.
And the group that the Oxygen Group is known for building mines. I think that there's been a few that have been built in the last little while. So you certainly have the support if you want to take it all the way to production.
Yeah, both in terms of board and management, we've done work across the board. True Gold was built and sold to Endeavour. Frontier is now one of Newmont's flagship mines that was sold a little bit before getting into production. So yeah, really kind of across the spectrum of exploration development, and eventually building a mine. Been there, and I've personally been part of five mine builds in my career. So listen, yeah, we have the background to be able to take it all the way. But again, as Forbes pointed out, we'll evaluate it at the appropriate time. Which 5 have you been involved in, Taj? Mainly, I worked for Inco over the years, so lots of huge capex projects, which is fantastic. So over the years, I was involved in Goro, Voisey's Bay, significant expansions in Sudbury, as well as a major smelter operation in Indonesia. And then obviously prior to coming to Discovery, we helped build we brought back the San Francisco mine for Timmins Gold back into production in Sonora, Mexico, about a 25,000 ton per day open pit. Right. And so another audience question, why not go straight to a pre-feasibility study?
Yeah, it's a good question. And I think it's always important to keep in mind the scale we're dealing with here. I mean, it's such a big footprint. And so the amount of drilling required to get everything into at least an M&I category, look, we're going to need more drill meters. And so it's a trade-off whether we sort of try and sort of rush a PFS out, but we want to do a good job with the PEA, like Taj said, make it a PEA plus. And so that should mean it's more a stepping stone so we can expedite the PFS and hopefully deliver that in 2022. But the key reason, it's a big footprint. We need a lot of drilling. And remember, the last study on this was 2018. It was done by a previous company in a completely different mindset. So for us to have a fresh study that reflects our approach, I think we need to get that out this year and then follow that quickly with the PFS next year.
When do you think that you would anticipate having a production type decision?
Very, very high level, Deb. We think we can, Q4 this year, the PEA comes out. About a year after that, we can get to a PFS, potentially earlier. We can accelerate things. And then basically about a year after that, construction decision, when you get to a definitive feasibility and then a construction decision. So you're talking about kind of Q3, Q4, kind of being in a construction decision position. Things could be accelerated. I will note we have 4 drill rigs going this year. We still have a very aggressive drill program, but we could accelerate even further by adding 6 drills, 8 drills, getting up to those kind of numbers. That could expedite things.
Okay. And then, are there any current mines or projects that you think are comparable or that you aspire to become? And what sort of NAVs do they have?
Yeah, look, like I said, in the silver space, there's not many of these big silver open pits. So look, I think Bear Creek and their Karani deposit is another one that they're down in Peru. So again, there are some similarities, but also a lot of differences between the two deposits. But if you look at Artemis Gold, actually, and the approach they've taken at Blackwater, I think that's probably a good analogy for how they've been able to surface value. And so they bought Blackwater from New Gold, a bit of an unloved asset, but they've really been able to surface value by bringing good grade material forward. And the NPV on that is north of $2 billion. They've got a very good following. And so that approach is effectively what we'll be doing as well at Cordero. So there's a couple of names there to take a closer look at, but yeah, certainly we do feel we're pretty unique in the silver space.
Okay, and then let's talk a little bit about the upcoming drilling program. How much of the $90 million in cash do you anticipate using on drilling, and how soon would that be?
Yeah, the total program for this year, including also exploration work, et cetera, is $25 million Canadian. We put that out in a January press release. Drilling makes up probably 20 million, 21 million of that. That represents about 70,000 meters, as I had said. And again, about 20,000 or so, that is for phase one, roughly. And then the remaining 50,000 meters or so is associated with the PFS and vein drilling.
Okay, and so you are looking at drilling beyond the pit area this year?
Well, the veins are outside of the high-grade pit area. But, you know, listen, like, for example, as Forbes pointed out, the high-grade pit area has already expanded pretty substantially from our last press release. We think there's reason to believe that could expand further. That's really the low-hanging fruit. And so, yeah, definitely, I think we would definitely look to expand the high-grade pit area.
And you have all permits, drilling, water, et cetera, in hand?
Yes, completely good to go from that point of view.
And how long are those permits good for?
I believe they're good for about 10, or some of them are 15 and some of them are 10, but we're good for a while.
And so based on your drill program and the cash that you have, it doesn't look like you need to raise money in the near term?
No, yeah, $90 million. There's also in 2022 some a few warrants that'll be coming in at substantially higher price. That will help to add to the till. They're in the money now, but that should help add to the till as well.
Okay. I have one more technical question, and then I think the rest relate to capital market strategy. Once you establish the oxides in the open pit, will you try and drill some deeper holes to search for possible high-grade sulfides?
Yeah, I can take that. So, so the oxides we tend to see don't make up a big portion of the deposit. So usually the oxide profile is sort of shallow, 10 to 30 meters. What the geological model we're working off is these veins actually look like they're the feeder systems to the deposit. And so what's happened is in the southwest here, when these veins, these feeder structures have hit, there's more permeable rock, you've got brecciated rock, and so the mineralization has been spread out over a very big area. So hence we're seeing broader widths, good grades, broader widths down the southwest, but up in the north here, where the rocks are some more the volcanics, much tighter rocks, a lot of the times the veins have been kept intact. So in terms of targeting, yeah, usually if there are some sort of nice high-grade veins, they do have some good continuity. With the oxides, we're not really seeing much in the way of any sort of supergene enrichment or mushrooming. So in theory, there tends to be good vertical continuity, and our focus has really been on the sulfides. So, but using that geological model, yeah, we're confirming that depth continuity with the sulfides below that thin oxide layer.
Yeah, and I just want to point out as a process engineer and metallurgist, this is classic sulfide metallurgy. It's got a lot of favorable metallurgical characteristics, coarse grind size, no interlocking between the galena and sphalerite. And so, yeah, it's really a classic sulfide, which is perfect for floating, for the exact flow sheet we want, milling flotation. So, and again, as Forbes pointed out, you're not really getting much in the way of oxides. You're kind of right into the sulfides. And that's, that's what makes it pretty clean and simple from a met point of view.
Okay. So here's a question that the three of us have discussed multiple times. So do you see discovery being included in any ETFs soon?
You want to try that, Josh?
Yeah. Listen, it's come to our attention that there's a pretty high potential for us to be added to the GDXJ in March, based on the criteria that need to be filled. We do fulfill the criteria. I think there's some broker research that's come out indicating we will be added, so it could represent some pretty significant kind of demand. So the other one that's on the radar is obviously the SILJ fund, and so there is potential for us to be added in March as well. I think the rebalance for that is also March. Forbes, any other color on that?
Yeah, no, I think they're the two key ones, which you never know with these ETFs until you actually get included, but certainly reading some of the brokerage research, yeah, it looks like we're a good candidate for that, so let's see.
And one of the criteria is that your, I think it has to be 50% of your future production comes from silver. Is that, I think that's one of the criteria. And you've done the math on that and you definitely qualify based on current prices.
Yeah, we're way through that. We're close to 70, and to be honest, we're actually probably one of the higher ones. If you look at us in the silver universe versus actual current silver producers, we're higher than probably 3/4 of them, if not even higher. So yeah, silver's a big component here.
For some reason, you guys get miscategorized as a base metals player at times, which I think you've been working to correct that. But yeah, you're certainly well levered to silver.
Yeah, the reason might have been the original properties within Discovery, the earlier stage properties were very high zinc, 30, 40, 50% kind of zinc, direct ship ore stuff, with a nice kicker of silver, 300, 250, 300 gram per ton kind of silver. So from that point of view, zinc was a pretty significant component in those earlier stage properties. Clearly, our flagship and our sole focus kind of right now is Cordero. And so definitely from that point of view, silver is our big mover.
Zinc's not a bad spot to be in right now, too.
Yeah, exactly. It's pretty interesting, actually. Yeah.
Yeah. Okay, so these questions might be a little bit difficult to answer, so just do your best. So there's a large number of stock options granted, I believe 5.5 million. Can you talk about those a little bit? In terms of
I can talk to those pretty quickly. Those I think are probably the ones that were indicated granted in January. Pretty simple thing to say. You're allowed 10% of your allocation options. We have probably under 5. We're probably at 4% of our pool allowed for options. We're way below the what's allowed and what a lot of companies get to. So we actually think we're in a really good position in terms of what we've been granting.
Okay, and then I had a question about your short position. So what's your short position look like right now? And I pulled it up on Bloomberg. In case you didn't know offhand, it's 3.2 million shares short. It seems like it's been at that level for a couple months, kind of fluctuating around. Can you speak to your short position? Do you think it's just hedging?
I think as a percentage of shares outstanding, I mean, it's obviously a very small amount. And yeah, certainly compared to some of our other silver peers, not very high. So in terms of opportunities to be part of a short squeeze here, there's probably not much in the way of that. That's only a couple of days of trading, right? So I think some of the numbers look bigger just because, yeah, out of share float, that is a higher number. But and over time, I think maybe you might see the trend there, but it hasn't sort of been a significant increase or anything like that over time.
No,
I do. A similar comment to that in the same color is the fact that we had these warrants that expire tomorrow. They've all been exercised. 30 million warrants to go through that, and the share price really didn't suffer at all. It stayed very strong over the past few months, and we've been able to add to the till. So exactly Forbes' points that we've got a lot of liquidity and a lot of people who do want to get in on the name. So
well, hopefully you get some buyers today. Already a couple people message me saying they're going to pick up some stock here. I guess going back to what you mentioned about short squeeze, I'd be interested in what you both think about what's going on in the silver markets with the Reddit stuff. And I'm sure you can't really comment too much on it, but I'd be interested in your views, having both of you being in the markets for a long time, particularly in silver.
Yeah, look, I think there's. I think it's really sort of flagged the disconnect between the physical market and the paper market. And I think it's some market commentators have sort of been pounding the table on that for a long time. But I think if you go on CIBC platform now and try to buy a physical ounce of silver in Canadian dollars, you're up around $50 an ounce. So obviously that's way above what the official quoted price is. So look, the paper market's always going to be there. Whether some of the fines or deterrents are going to have more an impact on some of the key traders, fingers crossed that will happen. But even aside from that, we feel that you've got the dual tailwinds with silver of growing industrial demand coming from the green energy movement. It's a big component of solar panels, photovoltaic cells, 5G, etc. Then you've also got the investment demand as well, just with negative real rates and people sort of trying to sort of hedge against the future inflation that's going to come and the currency value that silver has proved to have over a very long time. So I think it's created some noise, but I think it's important to keep in mind those long-term fundamentals are still very robust and aren't going away anytime soon.
Yeah, just to add some color to that, it's exactly what Forbes noted. It's silver's got the 1-2 punch, the industrial demand and investment demand. And the silver universe is about, the investment universe is about 1/10 the size of the gold universe. So there's already going to be a deficit from the industrial side of things. Again, with all these new green applications that you're going to need silver for in terms of being the highest conductivity metal, it's going to be needed for these high performance applications. You're already going to have, based on what you see out there, almost a couple 100 million ounces deficit per year, and that's growing. Into the late 20s, it could be substantially even more than that. And if you think about the total global mine supply is 800 million ounces. So if the deficit grows, plus you layer on the investment demand increase, and you know silver it reacts very quickly to marginal buying and selling. And I think you're really kind of in the early innings of a perfect storm. Silver in the past 3 precious bull markets has outperformed gold materially. That's a pretty well-known fact, but it's gone up 600% in the past, on average, in the past 3 bull markets. It's up about 80% now, I think, since we've started, depending on when you say this started. So again, really think we're in the early innings here. And again, I do want to point out that this project, the one you're seeing, the one we talked about, we built it for $18 silver, $20 silver. But if it goes, you're really not going to be able to get the kind of leverage you have here with our project. And again, the way it's staged, the way the ability to start with your starter project and the ability to expand, there's not many out there that like that.
Okay. I like that you brought it back to the project level and the fundamentals. I had one last question, which is impossible to answer, but we often get in webinars, which is, where do you see the price by year end? Rather than answer that question, why don't you remind us of all the catalysts that you have coming this year and sort of the core fundamentals of the project and why you both were excited to initially get involved and continue to be excited about what the drill results are returning.
Yeah, look, I mean, I think we've sort of brought up this timeline. We feel the delivery of the resource and the PA, the sort of key de-risking steps, and it's going to allow us to articulate what the value proposition of the company is in a much clearer fashion. And look, if you look at some of our more advanced peers, sort of Silvercrest, Mag, Silvers, they've got excellent multiples. Part of it is they're good quality names, but there's also that scarcity premium too, right? And so as those companies move into production and institutional money is looking for the next up and coming stories, hopefully we can deliver a PEA that will then sort of show up on a lot of radars. And then if we get similar type multiples, clearly there's a lot of upside from current levels, even without sort of silver prices taking off. So it really is, we're going to get the PEA out. It's going to give us a great opportunity to pound the table and focus on institutional investors and growing that part of our shareholder register. And hopefully we'll see some beautiful share price appreciation on the back of that too.
Yeah, to add color from my point of view, again, it kind of relates to the previous comment I made. We're making this project, our whole focus has been a project that works at $18 or $20 silver. So if silver even hangs in and around this, I think you're going to see in our PEA a project that looks extremely compelling at materially lower silver prices. And you'll be able to see the sensitivity with $3, $5 increases in silver price to who knows wherever you want to see it go. And you'll see, again, as Forbes pointed out, I think you'll see we're trading at a pretty deep discount for what this project actually could be worth, especially considering silver guys traded at higher PNAV multiples. So, and you know what, for me, same with Forbes, I've almost 2 decades here, been involved from exploration development to production, as I've talked about, in mine builds, but every 10, 15, 20 drill holes, we'll be doing new internal, iterations of what the mineral inventory looks like, of what the mine plans look like, and it's extremely encouraging. Areas that previously didn't have much drilling, you drill them and boom, all of a sudden, waste is turning into ore over a significant amount of tons. That's very encouraging to see, grade coming up, things like that. So it's, being intimately involved with this project since we've acquired it in late 2019, it's just been great to see how it's come out. And we hope that we hope and believe that's going to continue through 21.
So what would you consider a successful Q1 and Q2?
For 2021, that is.
Mm-hmm.
So look, I think from a phase 1 drilling point of view, continuing to sort of grow that sort of orange zone we showed on the plan map, expanding that, showing good grades over broad widths, because all that drill data, that's all going to go into the resource and the PEA. And as Taj said, we're doing these internal iterations and we can see the value creation. It really is telling the amount of value we're creating through the drill bit. And then look, the metallurgical test work is obviously the other key technical item. The metallurgy is simple and clean, but look, if we can demonstrate by using this high grade focus, we can get higher grade recoveries. Look, that's going to be a good win for us as well. It's not going to, there's still excellent recoveries without sort of that confirmation. Silver in the last study with a very low head grade was almost 90% recoveries. But if we can take 90%, get it 95%, obviously that's going to drop straight to the bottom line. And again, 5% to the NPV when we're talking the scale of our system is significant.
Agreed. And you drill year round?
Yep, year round.
I think that just about wraps it up for questions. There's one comment that I thought was worth sharing. Somebody's calling it bulk leverage, which I quite like. Maybe bulk leverage with a high grade vein kicker. Anything we haven't commented on today? Anything else you guys want to cover?
Not really. It was a good, very engaging Q&A session here. Again, please feel free to any viewers to reach out to us. We're readily available, and I'd love to answer any questions and discuss things as we continue to move forward. We're going to be very newsy. Lots of news coming out. Very busy. Yeah, and I think I just want to point out that we've, since we've acquired this project, we've set out a plan of what we're going to do, and we executed on it. Continuously executed. And I think that's what's helped build some, quite a bit of investor support, as well as good tailwinds, commodity prices, and we're going to hopefully keep executing.
Well, I think it continues to be a really interesting story watching it develop. Great management team, which is what we always look for. Strong backing. Huge project, huge potential. You've done a lot of drilling that's going to show up later this year in your updated resource. So I think it's really exciting. I like the phased approach and the lower capex for your phase 1. And yeah, I think it's a really interesting story that people should be definitely paying attention to. So thanks for starting off Silver Week, guys.
Thanks, Ted. Appreciate your time.
Perfect. Thanks.
Yeah.
Thank you.
Look forward to continuing following the story. If anyone has any questions, please feel free to reach out, and thank you all for participating.